Hello everyone and welcome back to this week's market analysis. As usual, we are going to start with gold. In the gold chart, we were expecting the continuation of the corrective trend. Based on the price behavior on the supportive trend line and the identified Fibonacci levels, several scenarios could be the likely outcome for this chart. In the first scenario, we expect to see some sideways movement and price correction in this area. After that, the price could continue its upward trend toward the green resistance zone and the resistance trend line. With a break and consolidation above this area, the upward trend could continue on this chart. If the price breaks below the 78 level and the supportive trend line, we witness a bearish corrective trend on the chart, which could extend down to the identified support zone as well as the Fibonacci levels of 127 and 138%. which would be considered targets for the bearish trend and wave C of this downward move. In the Euro-USD chart, we have already seen the start of an upward trend, and this bullish move could still continue. We expect the price to show some corrections and fluctuations in this zone, and afterward it could resume the upward trend, with the 161% level as the minimum target for this move. In this area, the price reaction to the resistance trend line will be so significant, a break and consolidation above this zone would suggest a continuation of the upward trend on the chart. And after the bullish move completes in this way, we could see a corrective and sideways trend developing in this part of this chart. If the price breaks below the support area, it could continue its correction towards the green support zone. However, as long as the price oscillates above this support without consolidating below it, the bullish scenario remains a likely medium-term outcome for this chart. In the Bitcoin chart, after hitting the 138% level, we saw a sharp upward move, which could likely be a part of a triangle pattern. Based on this, it is expected that the price could undergo a corrective move down to the 61.8% level, and in this area, we could see the start of another upward trend on the chart, with consolidation above the resistance zone serving as confirmation of the bullish trend. If the correction breaks below this support area, the corrective and sideways trend could continue towards the next Fibonacci levels, potentially extending down to the 78% level as well. In this area, wave E of the triangle could also form, and as long as the price fluctuates above this zone, a sharp upward trend could develop in the medium term, allowing the price to easily surpass previous highs. In the Dow Jones chart, after completion of the corrective pattern, an upward trend has started, with the index successfully consolidating above the resistance zone. As long as the index fluctuates above this area, the bullish move could continue toward the resistance levels and the resistance zone we identified. If during the recent upward wave, the index breaks below the support area, it would indicate a false breakout in this zone and could trigger a correction down to the support area we marked on the chart. Otherwise, the continuation of the upward trend remains the more likely scenario for this chart. Thank you for watching. If you find this analysis helpful, don't forget to like, subscribe, and share your thoughts in the comments. See you in the next video.